Welcome back to Grown Quality. My name is Elian, and today we will be talking about one of retail's favorite stocks, SoFi. Now, is SoFi a tech company or is it a bank? By the end of this video, you will be able to answer that question for yourself. But before we get there, we're going to talk about the products, the CEO, the growth analyst visions, a bull, a bear argument, and then my conclusion where I answer that question: is it a tech company or is it a bank? Now, let's just dive straight into it. Okay, so I have just slightly decreased myself so you have a clear vision of the screen. But SoFi offers multiple products. They divide it into three segments, namely their lending, their financial services, and their technology platform. Now, under the lending platform, we have student loans, we have mortgages, and we have personal loans. Under the financial services, we have their checkings and savings accounts, we have the credit cards, we have SoFi Insight or SoFi Invest. And then under the technology platform is where many people become very bullish on SoFi because here they have Galileo and Technisys. And due to these platforms, they are able to service other up and coming financial or fintech companies, and this should provide them with a lot of growth, according to other YouTubers. Now, keep that in mind, according to other YouTubers. By the end of this video, you will know my stance on this. Now, they also have their banking charter, so they are a bank. They are an official bank, which means they can keep loans on their balance sheet for longer if it's favorable for them. This is very important to remember as well. Okay, let's continue. Now, we cannot talk about SoFi without talking about the CEO. Anthony Noto. And for many people, he is a true leader of the company. Now, he's not a founder because the company was founded by three others who have since left the business due to internal irregularities. We'll keep it at that. But Anthony Noto has been leading the company since 2018 and has a very large stake within the company, or at least relatively large. He owns about 2% of the company, or about $135 million worth of stock in the business. And that's quite a lot, certainly for a CEO who isn't a founder. He also buys the shares himself. So that's, of course, very positive, and he's really seen as a leader of the business. Now, Anthony Noto has some experience at Twitter, at Goldman Sachs, and it sounds really fun at the NFL as chief financial officer. But yeah, like I said, Anthony Noto, a true leader of the business. He comes across as operating it like an owner. Although he isn't a founder, he still owns a lot of shares within the company. Okay, so then we get to the growth segment. Now, I'm going to highlight multiple examples of their growth, starting with the lending segment. And what I want you to look at is what I have already highlighted for you, but that's the personal loans. The personal loans, they have grown in an immense way. It's really unnatural how extremely fast this segment has grown. Now, from 2021 to 2022, the growth was about 80%. And from 22 to 23, again, 40%. Now, this is, of course, just huge. But the student loan business grew as well, year over year about 17%, and the home loans just slightly. Now, these are all numbers from Q4 2023, and I know Q1 24 is out now, but that was just a bit too tight in my schedule, so I'm gonna take Q4 23 numbers because, well, it's not like something has drastically changed from going from one quarter to the next. I mean, they had profitability in Q4 23. They have profitability in Q1 24. But we'll get to that later. Okay. Now, as you already saw, the lending segment, the amount of loans they gave out, here we have the revenues, because SoFi got about 960 to 961, depending how you want to round it off, of net interest income. And this is, of course, a huge amount. This is 80% change year over year. Now, revenues grew, or loans given out grew 40%, but the revenue grew 80%. And this is very impressive, of course. That means that they get better handle on the spreads between the loans given and the cost of it. Okay, so total net revenue also increased by 20%, and this was due to a slowdown in non-interest income. Now, if we look at the cost of revenue, or as SoFi calls it, the directly attributable expenses, very handy slide, by the way, you can see that they have increased a lot of expenses or a lot of spend on lead generation. But this is only good because they want to grow the business aggressively, because they are in a position of power currently. I will explain you why in my conclusion, but they have a position of power here and they try to use it very well. They are limiting their growth themselves in order to keep a good balance sheet. But once again, I will explain you why and my conclusion. Just hang on for it. So if we then look at the financial services segment, we can see that revenue grew 260%. Now, once again, the financial services segment, that is the checkings and savings account, it's the credit card, it's the insights and the SoFi Invest. And they grew net interest income by 260%. That's really, really much, or a really large number. And they basically made this from a money losing segment in the business to, well, break even basically. They made a huge step in this segment. And that is really great of them. Now, let's look at some analyst projections, just some EPS numbers for the coming quarters and some revenue numbers. Now, here we have the analyst views of the financials, and this is a slide taken or a picture taken from TradingView. Now, the numbers between TradingView and Yahoo Finance, they often differ slightly. Has probably to do with the data providers. But since SoFi gives you the numbers, or SoFi, as TradingView gives you the numbers so easily, I just wanted to take this because it gives you a clear path over the coming 4 quarters. Now you can also put it at annual, and then you get a few years ahead. Instead of just 1 year and 3 years and 5 years, for example, they just project every year out. And that's a very good thing in my opinion. But what we can see here is the turnaround that SoFi has made in the previous quarters. Now in Q3 23, they took some charges for restructuring, I believe, from the top of my head. But they have guided towards every quarter in 24 being profitable. And analysts want to see it. Now, we can see that at Q4, they even go as far as 3 cents of EPS. And it might not seem like a lot, but it's 3 times as much as they had in the previous quarter. So they got quite a ways to go there, as they are switching the business from money losing to being net profitable. And those numbers are GAAP as well. It's not like they do some really weird adjusting in order to become profitable in the investors' eyes. No, this is actual GAAP profitability. And in Q1, for example, they took some gains from bond obligations. They paid off, I believe they paid off some convertible bonds, and they took a 59 million profit from it, or they realized a 59 million profit from it. They deducted it and still came to 1 or 2 cents of GAAP EPS. They were still GAAP profitable. That's a really positive sign for the business. They are focused on real numbers. That's a good thing in my opinion. Okay, so then we get to the guidance, and let's just go through it together, because 2024 remains a transition year for SoFi, as the tech platform and financial services segment together are expected to drive growth and increase from 38% of total adjusted net revenue in 2023 to approximately 50% for the full year 24. For the full year 24, management expect to deliver adjusted net revenue of 2.39 to 2.43 billion, which is 25 million higher than the implied prior guidance range of 2.365 or 2.45 billion. This guidance assumes lending revenue will be 92 to 95% of 2023 levels, which is unchanged from the prior guidance. Tech platform will grow approximately 20% year over year, which is also unchanged, and financial services revenue is expected to grow more than 75% year over year. So that's really big growth, especially in the financial services. They really expect a lot of growth. Now, additionally, management now expects to deliver adjusted EBITDA of 590 to 600 million, above prior guidance of 580 to 590 million. This represents 15 to 17% adjusted net revenue growth and a 25% adjusted EBITDA margin. Management now expects full year GAAP net income of 165 to 175 million, above prior guidance of 95 to 105 million, and GAAP EPS of 8 to 9 cents, above prior guidance of 7 to 8 cents. So basically, the full year GAAP net income, that part has increased a lot. The other parts, like negligible. I mean, not really. Is that 10% bump up in adjusted EBITDA really worth mentioning? I'd say maybe just beat the number. But the full year GAAP net income, that is an important bump up. Yeah. So for the second quarter of 2024, managements expect to deliver adjusted net revenues of 555 to 565 million, adjusted EBITDA of 115 to 125 million, and net income of $5 to $10 million. Now, what I forgot to mention is that this is the guidance from Q1 24. So like I said, most of the stuff is taken from their 10K annual report, but this is taken from their 10Q, the quarterly report, in order to, well, they updated the guidance. So this is the most recent guidance they gave. Management will further address full year guidance in this quarterly earnings conference call. Management has not reconciled forward-looking. Okay, that nonsense. They upped their guidance, which is very positive. But besides the net income, I don't think it was that necessary to really go into it. Like I said, 10 million jump or 10 million bump up in adjusted EBITDA. Not really worth mentioning, just beat the number. Checkings account and savings account. And this makes it like they want to be one-stop shop for all your personal finance. It's really what they want to be and really what they project to become in their product development. Now, of course, there is also a bear argument to be made for this company. And the bear argument I have here is, well, you may not like it, but it's Galileo. I mean, it has potential, don't get me wrong. It has a lot of potential. But right now, it's more of a drag on the business. It's losing money and it's not really contributing. Well, I might say that a bit wrong, but it's contributing less revenue than the other parts are. And I see this by many people as the bull argument or the call option on SoFi, on how they want to say it. But in my opinion, it's not. I mean, it can be in the future once they turn it profitable and they grow it, well, quite a bit actually. It can be a higher margin part of the business, which will just push up their margins. And that's a good thing, of course. But as of now, as we analyze the company right now, I think it's more of the weaker part of the business. Doesn't mean it have to be in the future, just for now. Now, let's go to my conclusion and I will explain more on my thoughts of this business. And, well, maybe I have given it away already, but whether you should value it as a bank or a technology company. Okay, so we have reached the end of the video here. And I hope I have informed you a lot and maybe you have learned some new things or this has helped you in your, well, getting convinced of SoFi, or maybe completely the opposite, making you very much deflect from SoFi and thinking that maybe this is not an investment for you. Either way, I'm glad I helped. And if you want a more detailed explanation of SoFi, just check the link in the description below. I have a more detailed analysis on the company down there. It should help you more. But for now, maybe you have figured it out already for yourself if you should value SoFi as a tech company or a bank. But for me, it's a bank. They also try to, well, they give their numbers and they explain how they grew book value. A typical thing for a bank. Now, they do have a technology side to the business, that's true. And in my opinion, this can help with pushing up margins in the future. Now, this won't be something for this year, next year, or the year thereafter. I think this is something for over 5 years. Then it will contribute to margin numbers. Maybe, hopefully. Now, if we talk about SoFi, we cannot forget their competition because they are competing in a quite competitive landscape. And as SoFi says it themselves, they believe they are in a segment or an industry where the winner takes most. And it's important to beat the winner. Now, as for competitors, you can think of Robinhood, Acorns, or Upstart, maybe. Now, once again, I have some details, slight details, not too in depth, about how they differentiate from those three. But I think it's important to give some context to how the companies differ because, in my opinion, especially Robinhood offers quite a bit of comparable products. That having said, you have to think about the valuation. Now, I'm not going to give you my number or my dollar amount where I think this gets to a value range, at least not in this video, because I'm not going to give you personal financial advice or financial advice whatsoever. I just give you my opinion. Now, I do a very basic, very simple analysis of where I think it's good value or where the stock is good value in my written analysis on my website. But once again, it's not financial advice. Now, financial SoFi stockholders have been burned quite a bit over the past year, or past 2 years or 3 years even since the IPO, because SoFi used to trade up high towards the $20 range. Right now we're at 7. At the depths of 2022, the stock was at the $3 to $4 range. Even this year, or maybe towards the end of last year, the company or the stock peaked at over $10. So, what is happening there? Well, first of all, the stock has a very high short interest. So, every time it pops up, companies or institutions try to sell it down. Another thing is that many analysts think that the value is slightly below where the company is trading now or the stock is trading now. I don't think that's fully justified. I think we are quite well towards fair value here. But if you want to know where I think the actual fair value lies for this business, check out my analysis. It's linked down below. And with that being said, I want to thank you for watching. I hope you've enjoyed it. I hope you've learned something. And if you did, don't be shy to like this video and subscribe. And I hope to see you in my next video.